Even I did a double take on this one earlier today. A new Gallup poll finds that 48% of Americans say that they are now worried about the safety of their money that is deposited in banks all over this country. With us now is Hild. He's the executive director of Consumers Research. Will, how's it going?
Good. Glad to be with you.
Nice to talk to you. So you see this poll. Basically, the banks have been failing. 3 major bank failures. I think it's one thing to say, like, wow, there's banks out there that are failing, but my money's not in it, all good, to then being half the country is worried about banks. How did this get to this point?
Yeah, I think it's really an indictment of the federal banking regulators that they've let it get this far. What spreads a bank run is panic and fear. And so what you have to do is act quickly and swiftly and in a large enough manner that everyone in every other bank doesn't start to worry that their deposits might also be at risk. And the federal regulators have equivocated and said that they were going to do one thing or the other, and it's leading to a spread, a contagion of this bank panic.
Do you think what happened with SVB and how the government reacted, basically saying if your money is in a big bank, it is systemic, and so we're going to protect those big banks. And so then the question is, well, what about the smaller and regional banks? And then if you got your money in there and it's paying close to nothing when you can buy a bond at 5%, people are going, wait a minute, why is my money in the bank right now?
You're 100% correct. What the federal regulators' actions have basically done is create a 2-tiered banking system. You have what they call systemically important banks, which have a de facto unlimited insurance on those deposits. So if you have money at banks like Wells Fargo or BOA or JP Morgan, you know that you have the full faith and credit of the United States government backing all of your deposits. Where if you're at one of these smaller regional banks, you don't know. I think in the case of Silicon Valley, they ended up making all of the creditors of the bank whole. But if you have your money at some of these regional banks right now, is that something you really want to rely on? You probably want to move it. And that's creating a 2-tiered banking system where there are banks where you feel safe and banks where you don't.
SVB, of course, Silicon Valley Bank. Bob?
Will, as far as the big banks we've been talking about that have been caught up in the headlines, well, they're heavily regulated compared to other smaller banks. And we've been doing a fair amount of reporting on this. I don't think this is going to go away. I mean, do you anticipate more bad headlines, especially when we're talking about smaller banks? And, of course, this is coming at a time when Congress and the White House are struggling to lift the debt ceiling.
Yeah, I think we've, unfortunately, are in the middle of this bank panic, and unless the federal regulators act very swiftly to, end this 2-tiered system where there's banks where you don't have to worry about it, your deposits, and banks where you do, it's going to continue because you're going to see deposits flow out of these second-tiered banks into the big ones, and that really makes the problem worse. We've seen, you mentioned regulation. Well, one of the regulations is supposed to be that large banks, I think it's over 10% of deposits nationwide, if you hold that many or more, you're not allowed to make a banking acquisition because we don't want to effectively make every bank too big to fail and end up with just 5 big mega banks. But they overrode that regulation when it came to JP Morgan Chase acquiring First Republic. So now not only do we have all these regulations that are making banking harder, we've seen an incredible decrease in the number of new banks entering the market, but we also don't even know when these regulations are going to apply or when they're just going to be overrun because of the opinions of the regulators.
And Will, in terms of the regulators, on Capitol Hill, we are hearing Senate Democrats continue to really blast these banking executives for not enough regulations in place. Do you expect this fight to continue on Capitol Hill? Do you expect it to get more partisan between Democrats and Republicans on this issue?
I think there is going to be some partisanship on this, but there's probably also just going to be a lot of blaming all around. The banks are going to want to blame the regulators and the Federal Reserve. One of the parts of this that isn't, always making it into the story is a lot of these banks had very vanilla investments in U.S. Treasuries, but because of the record increase in the interest rates from the Federal Reserve, the value of those bonds dropped precipitously in a way that almost no economic models would have suggested was possible. And that's leading to a lot of the insolvencies of these banks. So there's plenty of blame to go around. I'm not letting the banks off the hook. Some of the banks like Silicon Valley, for example, were clearly not doing their due diligence when it came to risk management. They were focused on woke signaling. But the federal regulators play a huge role here as well.
Thanks for watching. Go to newsnationnow.com to find NewsNation on your television provider. And don't forget to subscribe. Click the red button to get more of NewsNation's fact-driven, unbiased coverage.